Bitcoin to the housing market bubble, the dot-com bubble, and I'm going to talk about why those two things are very different than the Bitcoin bubble that's going on right now. So stay tuned. What's going on, guys? Patrick here. I wanted to talk about Bitcoin this morning because I keep seeing the same videos over and over online, people talking about how Bitcoin is a bubble and how it's going to pop any single moment. I do agree that Bitcoin has been on an insane run. There's a lot of FOMO. There's a lot of emotions right now. People trying to buy Bitcoin. They don't care what price they buy it at. They want to buy it. And you can see this year alone, it's up there from the $800 area up $7,900 as the high this year. So pretty insane move for 1 year. I wanted to make this video talking about why I think the Bitcoin situation that we're in right now is much different than the dot-com bubble and the housing crisis bubble. And there's a very, very big difference. And I don't know why people don't talk about this, but they just talk about how the dot-com bubble went crazy and then it burst. How the housing market went crazy and it burst. One of the very, very big differences behind the whole Bitcoin run right now is that the banks are not involved. At least the bigger banks, the bigger firms are not involved in Bitcoin. They might be buying it in some different ways or they might be trading it, but they're not involved. They're not manipulating the price. So this is the NASDAQ chart showing the dot-com bubble back there in 2000, showing the pullback. If you look here, obviously, this thing ran up huge. Any company that had a .com name, this is when the internet first came out. This is when everyone thought that the internet was going to be the biggest and best thing ever for any kind of company that had a .com. Literally every single company that went public during the .com bubble went up huge. Some of these companies went up 500, 700% in the first day when they IPO'd, and a lot of times they ended up crashing. One of the big differences between the dot-com bubble and the Bitcoin situation that we're in right now is that the dot-com bubble was orchestrated by the banks. And when I say that, I'm not a conspiracy theorist. I'm not someone who's sitting here all day long and like, oh, the conspiracies. There's so many conspiracies out there. This is the fact that the big banks, that the big brokerages all were dipping their hands in the honeypot. And what I mean by that is they were all working with these companies. They were IPOing all of these companies at the time. They were creating very, very exaggerated prices, exaggerated outlooks. Basically, any company that added a .com to their name was worth billions overnight. And the banks were a part of that. The banks were selling all these IPOs to all of their customers, and everybody was trying to get rich. But the source of the huge price increase was really caused by the banks. The banks were the leading factor. They were basically pushing these crap companies on all of the people out there, all of the unexpecting people, telling people, buy, buy, buy. Anything with a .com, buy it because it's going to go up huge. All these big banks were a part of the IPOs, and they were pushing it, and they were pushing it. And the people were buying into it because they're thinking, hey, my bank is telling me to buy. Hey, my brokerage is telling me to buy. Why wouldn't I buy? These are trusted financial people. They know what they're talking about. But at the end of the day, all the banks cared about was selling these IPOs, and they didn't care what they had to do. They made up evaluations. They pumped it. They pumped it. This was literally a massive pump and dump caused by the banks. And everyone's going to be like, what is he talking about? How could the banks have done this? Well, the banks did it. It's fact. The banks were the ones who were behind the dot-com bubble. And like I said, I'm not trying to be a conspiracy theorist. I'm not, but I've done the research. I've seen all the facts, and the banks were really the ones who caused the dot-com bubble. The brokerages, the big firms were pushing out these dot-com IPOs and causing this mass FOMO hysteria of people wanting to buy dot-com companies. So that's the dot-com bubble. You can see big, huge, crazy move. It pulled right back. Bitcoin's already experienced kind of a crazy move back. 2014, you can see Bitcoin made a big move there from the $100 area up there to $1,000. It pulled back. And now we've had a pretty nice base for the last couple of years at that $400 area, kind of bouncing. But this last year, we've really went crazy. And you can see Bitcoin, pretty impressive move here on Bitcoin. One of the things I do like about Bitcoin right now is that we get these nice pops, we get a nice pullback, get a nice pop, get a nice pullback, get a nice pop, get a nice pullback. So overall, looking at this chart, it doesn't look like it's just a straight parabolic move. There is support. There is people buying these dips. These dips happen. It gets bought right back up. It goes to all-time highs. So you can see there is buying pressure. There are people that want Bitcoin. There are supporters of Bitcoin long-term. One of the things I really like about Bitcoin is, like I said, the banks are not issuing this. The banks are not pumping this up. This is not a bank orchestrated pump and dump like the dot-com bubble. If you look at the housing market bubble, same idea. 2007, we had the housing market inflated once again. Why was it inflated so much? Because the banks making subprime loans, putting out huge loans on houses that they knew had no value, giving people mortgages that they knew didn't have the actual income to pay, giving people adjustable rate mortgages that they knew would balloon over time and cause people to end up defaulting. But all the banks cared about was lining their pockets. They were doing the credit default swaps. They were doing anything and everything they could to get out before the bubble popped, and they were doing it maliciously, and they did it in plain sight. So you can see dot-com bubble, housing market, both of these bubbles correlating with the banks. Bitcoin not correlating with the banks. So there's the argument. You can see right now, literally in the last 4 or 5 years, we're back to all-time highs. Looking at the overall markets, you can see that dot-com bubble, the same kind of chart. And again, this last 4 years, the market's been going crazy. We're at all-time highs every other day. The market goes higher and higher. And there's an argument to be made that we're in a bubble right now, once again, in the stock market with these tech stocks like Facebook, Amazon, all these big stocks going up huge in the last year or so. So really the question I ask is Bitcoin an indicator showing people's skepticism in the overall market, in the overall financial system? So that's really the question we need to be asking. It's not the question that is Bitcoin a bubble, but really is everything else a bubble, and Bitcoin is reflecting that price, that people are safe havening their money, people are buying into Bitcoin. Obviously, people are buying into Bitcoin with the idea they're going to get rich. That's always going to be anything. But I think there's a lot of people that are behind Bitcoin, that are behind cryptocurrencies, that really do see a future, that really do see issues with the overall financial monetary system. So they're thinking, hey, I want to safeguard some of my money. I want to put this into Bitcoin, see what happens, and let this ride. But if you look at the overall markets, I would say the stock market right now is in a bubble. If you look back at the housing crisis, the dot-com bubble, there's a very, very clear correlation here that the banks orchestrated both of these big dump and pumps. And at the end of the day, they came out ahead and everybody else suffered. And that's what it comes down to. The banks always come out ahead, and the individuals that invested in these companies back in the dot-com, the people that bought houses with insane interest rates, all suffered. Where with Bitcoin, at the end of the day, it really comes down to the overall populace. If people want to support Bitcoin, if people see value of Bitcoin, it's going to be there. It's not the banks selling crappy companies to people. It's people around the world all coming together behind this one type of monetary system. And people are really believing in cryptocurrencies. They see the value there. So like anything that's new, anything that's unexplored, there's huge potential here with Bitcoin. I would equate this to the idea of social media, of the internet. Am I going to tell you that Bitcoin is 100% safe and there's nothing to worry about? No, I'm not going to tell you that. There obviously is always going to be risk with any kind of investment, with any kind of thing that you're doing. But I do see the potential here with Bitcoin. But I wanted to make it clear to people out there who keep making videos about how the dot-com bubble and the housing market bubble is the same thing as the Bitcoin bubble. It's not. Let's get it straight. Let's talk about the real underlying factor here that caused these bubbles in the past.